So in the early 1990s, the biotech market took the market by storm. And it was, think about it, it was new, it was exciting, a way to discover drugs, it inspired fresh thinking, all kinds of hopes for medical cures. And then the cash came pouring in. I mean, it was just absolutely crazy. The stocks went on a feeding frenzy. Wall Street went crazy. It was absolutely phenomenal. And then it wasn't. Things got a little rocky in the beginning of 1992, and then the bottom fell out in 1992. Almost a decade, by the way, before the dot-com crash, the biotech stocks flamed out big time, massive losses. But don't look now. The biotech sector is starting to come on strong. This time, no, without a lot of fanfare, which I kind of like. To be honest, this is a sector that hasn't had a lot of fanfare for a long time. I'm going to bring in Hennion Walsh Asset Management President, CIO, Kevin Mahn. And Kevin, you know, I still kind of remember the biotech crash, you know, and I've looked at them here and there. It's always been a difficult sector for me to understand because, you know, it's just hard. It's biotech. But sure. You're saying there's some key macro drivers, though, that you like here to begin with. Yes. The FDA, a friendlier FDA, yep. Mergers and acquisitions, AI, and this whole the weight loss miracle. Yeah. All of these combined and really giving a good push right here.
Correct. I see headwinds for large cap pharma and tailwinds for small cap biotech. The headwinds for large cap pharma, the Trump administration, Congress is all pushed on large cap pharma to lower their drug prices, right? We also see these large cap pharmaceutical companies with many drugs coming off a patent and now being subject to generic pricing. So where are they going to turn to replace all that lost revenue? They're going to turn to acquisitions of smaller cap biotech. Now, what are the tailwinds for them? Faster FDA drug approval, positive drug trial results, a pickup in M&A activity. All of those factors lead to more opportunities as it relates to these smaller cap biotechs.
So I put a 5-year chart here. It's a 5.5-year chart. This is the biotech against the S&P. Obviously, it's drifted, but we're making this nice turn here. Obviously here, I mean, we start to bounce here. There's a lot of room to the upside.
Absolutely. Let's think about since April 7th of this year, following the tariffs tantrum, the XBI is up roughly 39% through October 1st. 39%. The S&P is up just 33%. Investors are now starting to realize, hey, maybe now there is opportunities in biotechs because they haven't missed it. There's more upside from here.
MDGL is a symbol. How do you pronounce the name of this company?
Madrigal. It's a $10 billion biotech based in West Conshohocken, Pennsylvania.
I got to tell you something. This is a gem. I should have used the longer term chart. This thing has been a juggernaut, and you still think it's a buy?
I absolutely do. They're focused on providing treatments for certain cardiovascular diseases and liver diseases. In fact, they already have one that's been approved.
You got another tongue twister here.
Unicorn.
Okay, Q-U-R-E. I love the symbol. Again, what's interesting, I guess, when you see these big spikes on something like this, is that like FDA news or something?
100%. Yeah. 100%. And that's why you have to build a diversified portfolio, not just trying to pick a couple names. But Unicure, based in the Netherlands, is focused on gene therapies to treat afflictions such as Huntington's disease or even other cardiovascular diseases. A lot of upside there.
Nuvation?
Nuvation, a really small cap, about $1 billion.
For the folks on radio, N-U-V-B.
Yes,
you've never heard this one before, but the chart looks amazing.
Very small cap biotech, very volatile, about $1 billion in market cap. But guess what? They're focused on oncology and meeting some of the unmet needs as it relates to cancer therapies. We think there's more upside potential. They're based in San Francisco.
These kind of names that when they work, they really work like mind-boggling. Like, you know, the returns can be huge. Would you just add the caveat the risk is a little higher?
100%. We have our own strategy at Smart Trust called Healthcare Innovations Trust. It builds a portfolio of 30 different small cap biotech names that we believe have the highest likelihood of being taken over the next 2 years. Don't just pick one or two, build a big portfolio.
Gotcha. Kevin, looking good, my man.
Thank you, Charles.
Have a great
Appreciate
weekend.
you.